So this is essentially his public model, right? We've got a liquidity run. This is buy side liquidity, buy side liquidity, buy side liquidity, reaching up into close to a fair value gap. Boom. Okay. Price kind of fizzles out and begins to trade opposite. So knowing that we're already bearish, one thing I'm thinking is during this, yes, I could get into moves. What you saw, I kind of got into a little move here. Didn't really take much. I probably shouldn't have been. I don't know if I was trying to really be in this trade because it doesn't really look like I stayed in, right? But I waited until price had done what it wanted to do, and then I saw that price begin to trade down. Now, as I was pegging this trade, and I say pegging, I use that as as I was choosing the trade, right? I already knew buy side liquidity was breached, so I'm still looking bearish, right? I'm looking in this general area, and I always like to break it down to the 15-minute, but when I'm actually getting into trades, I'm looking at the 15, I'm looking at the 5, the 3-minute, and the 1 minute, because I really like to see what price is doing. I want to see the impulses, I want to see how price is moving, and I'll show you exactly what I'm talking about. So here, if we get down into the nitty-gritty of the 3-minute chart, we can see that there was a breaker formed, very small breaker, but you'll see that price respected it. Here it goes. I think so maybe I'll go to the 5 because that's a little bit not exactly what I want it to look like. Let's see. Okay, boom. So that same breaker that I showed you earlier, the high, the low, higher high, right? 2 down closed candles in the midst of what was a small uptrend creates the breaker. Now, you see price trade through it, right? It trades back into it, but not past it. Signifies that we can continue to look for bearish trades. If it had traded past it and kept going up, I'm done. I'm out of it because I don't know what's going to happen. What I wanted to happen is not going to happen. So now I need to sit on the sidelines, right? That's a lesson that everyone needs to learn. A lot of times we like to try to force a trade. No, if what I want to happen isn't forming, the best thing for me to do personally with my psychology, sit on the sidelines, wait till I can see what's happening. And usually that happens for me in the window of 9 to 11 a.m. ICT talks about the kill zones for New York being, 8:30 to 12 p.m., 8:30 a.m., 12 p.m. But for me personally, my best trades come after the news between 9 and 11 a.m. because I can see what's going to happen, right? So at this point in time, this day, I had taken my sister to the airport. I was at work really early, only one in the office. It's like 5 a.m. I'm so tired. I'm falling asleep watching this. I didn't even see this breaker form, okay? But what I did see is that price continued to give me lower highs, right? It continued to give me lower highs, and to the point where I was looking at the same time simultaneously on the DXY, the essential US dollar index, right? And looking for the opposite price movement, right? So as this chart, GBP USD, is looking like it's phasing down, I'm looking on the DXY to understand, is it looking like it's getting ready to go up, right? If the DXY is going to go up, then GBP USD or any foreign currency that's linked to the US dollar should go down, in theory, right? So as I'm looking at this, I'm watching price continue to make lower highs. I thought about getting in up here. I thought about getting in right here. It turned around and I'm glad I didn't get in, right? I'm just waiting for that kill zone time period where 8:30 hits and I can begin to look for trades, right? So that kill zone time frame hits, price comes up, right? So now I'm looking between the 3 charts. I'm looking between the 3 charts. And what ICT talks about on his public mentorship on YouTube is that we like to look for an order block, which we saw here, 2 up close candles. So he always talks about the highest up close. We could go, each of these is an order block, right? Boom, order block. And I like to color them with orange just so I can designate. So boom, okay, I guess that's an order block. Okay, you could say that, technically, I guess. Oh, okay, that's order block too, I guess, right? But really, what we want to see is the most recent. I like to use the most recent order block and the most recent fair value gap. So ICT talks about how when you have an order block across from a fair value gap and price respects that area, not only that, but price trades past the order block with an influx and creates a fair value gap, that is the key ingredient to a good setup, right? So those things is what I'm looking for. We got the breaker. Price already traded past the breaker. Boom. A lot of times you like to see this breaker, order block, and fair value gap. Price trades back into that. Boom, that's a trade that I can take, right? Let's go back over it again. We have an order block, right? A higher up close candle, a fair value gap that price is traded through that order block, and the breaker, which price comes back in, respects all three, and then continues down in the negative direction. I didn't take that trade, right? I told you I was asleep, okay? I didn't see it. But what I did see is that same formation down here. What is this? Price. 2 up close candles creates an order block, right? Now, ICT often likes to use the tails of the wicks as well to show you how long that order. We're using the entire length of that candle, the wick and the body, right? Price trades up into it. Now, this is a 15-minute chart. You could look on a higher time frame to get a little bit clearer estimation of what exactly this looks like, right? This is an entire fair value gap on the 30-minute chart. On the 15, it looks like it's almost 2 of them, right? If we go back over here, it's like a fair value gap and a fair value gap. So what does ICT always talk about publicly on his mentorship? ICT likes to talk about how, yes, you want to get into the trade in the first fair value gap, but you want your stop to be set at least higher than the second in case price goes up here, right? Me personally, I'm waiting for this candle to trade past this. I am not taking a chance. I would rather see all that happen and then have a candle trade past it and then set my stop above that recent high, which is exactly what I probably did. I took these executions right here. You can see it. This is obviously a demo, right? This is a demo. I took, this would equal to a 10 lot size, and then this would equal to a much smaller one. So I tested it, and then I got in with a big lot size, okay? So boom, we're going to the smaller time frames. You can see on the exact candle that I got in on. Let's see where that is. Okay, boom. We're gonna get into this range. This is the range that I took the trade in, right? So this is where we're at. I waited for, I explained to you what I was looking at, right? Price begins to trade past what was that 5-minute candle. I get in when I see the impulse, when I see that price is really getting ready to move. Now, that's just me personally. I just like to be sure that the impulse is happening here and at the same time happening in the DXY gives me the confirmation that I need to be confident and comfortable entering that trade. It was the trade that got me to pass the challenge portion, and now I'm on the verification portion of the FTMO challenge. So like I said, I'm still in the midst of even getting a live account. But regardless of that, I'm just sharing y'all my journey. And hopefully through my journey, you guys can get some tips and tricks that might help you in trying to kind of lend my mentorship experience, what I can share, to ensure you that if you were to engage in ICT's content that he shared publicly, you can really be successful.